Thanks for tuning in to the Weekly Wrap on Friday the 25th of September. I'm Jessica Amir, a market analyst with Bell Direct. Well, the Aussie share market rose 1.3% as at Friday at 10:30am. That's our best weekly gain in about 7 weeks, with investors buying into defensives and moving out of sectors that are tied to economic growth. All this is because European governments are now working through a second COVID-19 wave, pushing out hopes of an economic recovery. As a result, the safe haven US dollar continued to push higher, rising to its highest level since late July. That pressured commodities given they trade in US dollars, and the iron ore price fell 3.5%, gold losing 3%. Now, this pullback saw investors reduce their mining positions and instead top up their healthcare and consumer staples exposures, given these sectors have historically outperformed in recessionary environments. As for standout stocks this week, utility provider ServiceStream, SSM, up the most 12% after the NBN Co announced $4.5 billion of new network investments, which will see additional fibre laid out for connections, upgrades to networks and large-scale investment into regional areas. Now, this all provides tailwinds for SSM and explains why Bell Potter upgraded SSM as a buy with a $2.30 target. On the other side of the market this week, we saw Virgin Money, VUK, one of the UK's biggest banks, see one of the worst slumps in the ASX 200, down 16%, as the UK entered tougher restrictions for potentially the next 6 months. So that's something significant to consider, a delayed UK recovery due to increased lockdowns. So it's worthwhile assessing your positions in UK exposed businesses like Virgin Money VUK, fund manager Pendle PDL, which has 50% of its business in the UK, Link Market Services LNK, which is UK's biggest share registry, and also private hospital provider RHC Ramsay, which has 34 hospitals in the UK. So think about those. And given the encouragement to work at home in the UK, you could look at shop at home, buy now, pay later businesses like Afterpay, which is increasing its UK market share, and Lay-By, which already has got quite a sticky UK base. Also look at cloud businesses, as demand to migrate businesses to remote working will be magnified. So you could look at Ripe, RHP, Megaport MP1 and NextDC NXT. Now, the second big thing to watch is interest rates. Both the US Fed and the RBA committed in unison for the first time to keep rates at record lows for 3 years. A strong signal that banks are doing all they can to put a backbone into the economy until employment is back at pre-COVID levels. Now, Westpac came out saying that they expect the RBA to cut rates by 0.1% next month. But regardless of what happens, we know rates will be lower for some time, and there's bond buying from central banks, so money is being flushed into this system. Now, this is going to see investors continue to chase returns and take on more risk, investing into markets. And this, of course, supports stock market valuations. So what to invest in this regard? Well, as we're in a recession, I'd look at staples and healthcare, traditional recession outperformers, and tech. Now, in sickness and in health, UBS has buys on CSL with a $346 target, disinfection company Nanosonics with a $7.20 target, diagnostic company Pro Medicus PME with a $26.52 target, saying all of these buys are undervalued and provide upside. Now, among consumer staples, UBS likes fresh food grower Costa Group, CGC, with a $3.55 target. Now, Bell Potter is more bullish than UBS with a $4.05 target. UBS also likes almond grower Select Harvest, SHV, $7.75 target, and Bell Potter targets $6.10. Now, as for tech darlings, UBS likes the Siri maker Appen APX, $44 target for them, and data center business, which you spoke about earlier, NextDC, with a $14.15 target. Now, what to watch in the next couple of weeks? Well, on Tuesday, the 6th of October, the RBA will make their interest rate decision. The same day, the federal budget will be handed down with a focus on getting our economy back on track. So expect a large deficit, given record spending on JobKeeper and JobSeeker. Also expect that overhaul of the bankruptcy legislation and for the government to scrap responsible lending laws, all to encourage loan growth And also watch out for extra infrastructure spending. That's on top of the $100 billion pipeline. All this to boost the economy. Now, last but not least, this week we caught up with an expert investor, the CIO of Magellan MFG, Hamish Douglas. So we thought we'd share how he is approaching investing amid the pandemic and what you could take away from that. Well, firstly, Magellan has been investing into cloud computing, businesses supporting the cloud, and investing into video streaming, as these businesses are benefiting from the COVID-19 behavioural shifts. Secondly, he's backing payment companies too, given cash has almost become a dirty commodity. Now, thirdly, MFG has bought into a listed stock exchange. He didn't say which one, but he says exchanges will be a beneficiary of increased trading if the stock market has another leg down. And lastly, he thinks investors should consider the need for increased hygiene. So potentially think about companies benefiting from this thematic. Hopefully that helps you approach the way to look at your strategies. For the full interview with Magellan co-founder, head to Bell Direct's website. From all of us here at Bell Direct, have a happy and safe weekend. Thanks for your company. I'm Jessica Amir.